welcome to my TED Talk. Today we will be discussing the impact of earnings reports on both the stock market, individual stocks, and the global economy and the American economy as a whole. In today's advanced consumer base and markets, gone are the days of people simply listening to the advice of a stockbroker over the phone and purchasing the stocks that they were advised to buy. Now, various different factors are contributing rather than just being an established brand or just being a stock highly recommended by your broker, as I said before. These factors include the brand's announcements regarding near future innovations and the past period's earnings reports and statistics. With all these factors, the question remains, what is the level of impact earnings reports have on a stock's fluctuation, and are they a viable method by which to trade? In the late 1980s and 1990s, as I mentioned before, trading was all about the brokerage and being sold on the right stock. Seldom did the average investor put in the copious amounts of time researching that they do today. Now people research each share's upside and the period of time they would like to hold a stock and whether they would earn a valuable return on investment. Now, Google, TD Ameritrade, Robinhood, and various other research outlets have become a sort of in-home broker. The only real responsibility of the investor is to know what they're looking for and buy when they think the time is right. The research outlets simply do the rest. Thus, it is vital for them to continuously search for new strategies which will allow them to make as much money as fast as possible. Blue chip stocks and companies of the upper echelon are the most affected by earnings reports and statistics regarding new innovation, such as release date and specs of a certain device. This is because the changes are announced in such grand manners. They can be through a keynote event or just releasing surprising info regarding earnings. One such company whose shares seem to heavily fluctuate around announcements and earnings reports is Apple. In their press release, Apple revealed the numbers for their first quarter earnings and expanded on the impact of these earnings. Apple also includes spreadsheets and official documentation to establish the credibility of the numbers they are referencing. Additionally, the credibility of the company is already at such a high because of the brand that Apple has established. And even on their official website, they list exact numbers as given in the following statement. Apple is providing the following guidance in its fiscal 2020 second quarter: revenue between $63 billion and $67 billion, a gross margin of 38 and 39%, and operating expenses of the high 9 billions, a $250 million tax rate, which is approximately 16.5%. Thus, we can see that Apple is not shying away from revealing the numbers. Blue chip stocks, like the aforementioned Apple, tend to fluctuate the most following surprising or unexpected earnings. Whether these earnings are higher or lower than expected is what dictates the reaction of the stock, because when earnings are lower, some people tend to panic sell, and when earnings are high, people tend to panic buy. This is all due to the vast majority of the market being uninformed and unaware of how much a share can keep growing or keep declining, or otherwise just being impatient and wanting to buy when they see an opportunity for a quick increase and wanting to sell before losing too much money. Unlike Apple, one of the more peculiar and difficult to understand stocks of the past 5 years has been Tesla. Tesla's emergence into the auto industry has been astronomical, and Tesla has the reputation of being one of the most volatile stocks of all time. To someone with less knowledge, these fluctuations seem entirely random, as some days the share goes up or down by tens of percents. However, what makes Tesla stock volatile is the level of innovation they promise in each of their keynote events. They promise Model X's with Lamborghini car doors, or a Roadster that retails for $250K but with one of the best engines of all time. Thus, when earnings or production numbers are lower than or higher than expected, the stock fluctuates drastically. Additionally, when people with pre-orders grow impatient and withdraw orders, and these numbers are released, the stock continues to either decline, or if people put in a high amount of orders, increase. In her Tesla reports new delivery figures soon, here's what to watch. Anay Gulati discusses the recent figures about Tesla production. She discusses the impact of these numbers on Tesla's earnings and its share prices. The credibility of this website is somewhat questionable because it is not a known reporter over the economy. She states Tesla had guided for 500,000 vehicles in 2020, but its ability to meet that target looks tenuous at best in the face of the supply chain disruptions, business closures, and weakening demand. Tesla's share at last check rose 4.9% to $526.90, and Tesla typically reports delivery figures within the first few days of a quarter. As we segue, based on what Anay Gulati said, that businesses are closing, we have seen a previously unseen reaction in the market caused by the coronavirus. It is vital to now monitor which industries have been impacted the most. While the virus is awful for everyday life and people in need, it can serve as an opportunity to make levels of profits which never previously would have been possible in the previous market's climate. Such industries which now have become viable long-term investments include travel, tourism, and banking. In his What to Keep an Eye On in Q1 of Bank Earnings Reports, Bram Berkowitz discusses the projections for earnings reports for banks. He discusses what impact recent events would have on banks and their shares. And while as a source this is not the most reputable, purely due to the immature web domain, it will be interesting to see how banks' balance sheets fare from all the expected mortgage deferments, businesses requesting extended lines of credit, and higher loan loss reserves. Unlike the previous article, Henry Ong, in his How Do Quarterly Earnings Affect Stock Prices, discusses the general impact of earnings reports. This source is highly reputable because it is from the Business Inquirer, which is largely known to have great insight on the market and businesses in America as a whole. He states that quarterly earnings reports are important financial updates that provide a market glimpse on how stocks will likely be valued in the future. Stock prices tend to rise when earnings exceed market expectations, while disappointing earnings tend to lower share prices. And this falls directly in line with what I've said throughout this TED Talk. Earnings reports have a massive impact on a stock's forecast, as everyone knows.